Welcome to the Mental Health Market Update, where we talk about what's happening in the mental health industry. Here's your host, Stephen Hayes.
Welcome back to the Stigma podcast. Today's Friday, June 12th, 2020. Today's episode is a mental health market update, and we're going to be digging into the largest inpatient psychiatric hospital operator in the United States, who is also the largest private psychiatric hospital operator in the United Kingdom. This company is called Acadia Healthcare. It's a publicly traded company with a $2.2 billion market cap. And in this episode, we're going to dive into their business model, valuation trends, why their US and UK businesses are valued so differently, how they're valued, and what it means for those of us focused on the early stage market within the behavioral healthcare space. This business is important for me to track because they are a traditional physical behavioral healthcare provider, and they are selling a business unit. How that business unit trades is going to be important. How the market trades their equity is important. And the data they report on usage coming in and out of COVID is also very important to me. So a little bit more about the company itself. Acadia Healthcare is a provider of behavioral and addiction treatment services. They do this through a network of almost 600 facilities, including approximately 18,200 beds in 40 states within the US, the United Kingdom, and Puerto Rico. They treat people of all ages who suffer from mental disorders as well as addiction. In 2019, the company generated $3 billion of revenue with adjusted EBITDA of $586 million. Q1 2020, the company performed rather well despite COVID. They actually only missed their pre-COVID revenue and EBITDA consensus estimates by 2% and 1% respectively. Their US patient days declined year over year by 7% in April, which is far better than many of the analysts had projected. At a UBS healthcare conference in mid-May, the management team indicated that the year-over-year decline for the first 2 weeks of May was only down 2.5% from last year, highlighting improving trends on top of a better-than-expected April. The company indicated that the decline in the UK was even lighter than this, and it seems to me, based on that, COVID didn't impact them as much as many people feared, and also proved a lot of what the company says about how their business is somewhat recession-resistant. Management has also indicated recently that they believe demand for behavioral healthcare services will be stronger post-COVID due to the impact self-isolation and job losses have had on those with existing mental health issues and those without existing. This isn't really a surprise, as just, really everybody's talking about this. During the company's presentation at the UBS conference in May, the management team went on to explain that Acadia saw a 900% increase in crisis hotline activity in March, which continued into April. Additionally, the United Kingdom's National Health Service informed ACHC that it expects an increase in demand following the pandemic and has asked ACHC to prepare capacity planning with this in mind. ACHC also expects there to be a pent-up demand component as those who deferred care during and because of COVID, either due to stay-at-home orders or a reluctance to visit a healthcare setting, re-enter the behavioral healthcare system over the coming months. We saw that trend in other businesses. There's a population of people who are refusing to use remote or virtual care and just sitting around waiting until care is available in person. We believe this bodes well for in-person and hybrid business models in this space. And this isn't just our opinion. One Medical has talked about this lately, as have leaders of other businesses and other research analysts. Acadia reports its business in two primary segments: United States and United Kingdom operations. In the US, services can generally be classified into the following categories: 1, acute inpatient psychiatric facilities; 2, specialty treatment facilities; 3, residential treatment centers; and 4, outpatient community-based facilities. The company has 224 behavioral health facilities in the United States, with approximately 9,500 beds in 40 states and Puerto Rico. Of the US facilities, excluding comprehensive treatment centers, approximately 43% are acute inpatient psychiatric facilities, 41% are specialty treatment facilities, and 13% are residential treatment centers, while the remaining 3% are outpatient community-based facilities. The U.S. business is their best business. The revenue has grown quite a bit. Back in 2013, the U.S. business was doing $711 million of revenue annually. In 2019, the business did just over $2 billion. The company is projected to do a little more than $2 billion in 2020, even with COVID. Then in 2021, the U.S. business is expected to grow 10% and then grow another 5 to 10% in 2022. The EBITDA margin of the U.S. business has historically been around 25 to 26% in the last 4 or 5 years. In 2019, that margin was 25.1%. Analysts expect that margin to drop to 23% in 2020, but a lot of that's because of what we've just been through in the pandemic. That margin is expected to expand in the US business to 24-25% in coming years. So, how do they get paid? The company receives payments from the following sources for services in their US facilities. Number one, state governments under their respective Medicaid and other programs. Two, commercial insurers. Number three, federal government under Medicare. And number four, individual patients and clients. In 2019, the US facilities received 50% of their revenue from Medicaid, 28% from commercial payers, 15% from Medicare, and 7% from other payers. Now let's take a look at the UK operations, which significantly underperformed the US. First of all, they attempted to sell this division recently, but put that process on hold because of COVID-19. There was a lot of interest. There were buyers circling, but COVID-19, just like everything else, put that process on hold. Acadia is the leading provider of mental health services in the UK. And at the end of 2019, the company's UK facilities included 361 behavioral health facilities with approximately 8,700 beds, including approximately 1,100 non-residential education places in the UK. Within the United Kingdom, the company provides inpatient services through a variety of facilities, including mental health hospitals, clinics, care homes, schools, colleges, and children's homes. In addition to these services, they also provide employee assistance programs, EAPs, to corporations. Of the UK facilities, approximately 22% are healthcare facilities, 18% are education and children's services facilities, and about 60% are adult care facilities. The revenue in the UK business back in 2014 was $151 million. That jumped in 2016 to about $1.1 billion per year, and has remained flat every year since, give or take a little bit, and is projected to remain moderately flat in the coming years. During that time, EBITDA margin for the UK business has dropped from about 26%, which is kind of what we see in the US, has dropped down to 15% per year in 2019 and is expected to remain below 15% from here on out. Needless to say, the operating dynamics in the UK are challenging. This company is overlevered. They need to reduce debt. And so why not sell the underperforming asset? How do they get paid in the UK? Acadia receives payment from approximately 500 public sources in the UK. This includes the NHS, CCGs, and other local authorities in England, Scotland, and Wales. Individual patients are also payers in the UK, but in 2019, they received 90% of their revenue from publicly funded sources and 10 from other payers. So let's talk valuation. What is this company worth? What does it trade for? How's it been trending over time? And what does that mean? As of close of market on Thursday, June 11th, the company's stock price was $25.81 after the market took a bath on Thursday, where ACHC saw a decline of 8.48%, while the broader S&P 500 declined 5.89%. Painful day if you were long equities. This stock price equates to a consensus 2020 revenue multiple of 1.9x and EBITDA multiple of 10.6x. You may be thinking about what we talked about in past episodes, where all those disruptive healthcare peers, the comps for our behavioral health startups, were trading at an average of 6 to 8x forward revenue. Keep in mind, those are high growth, high margin businesses. And to be honest, Acadia is only growing by about 1.9% this year, and is expected to generate EBITDA margin on the whole of about 17.5%, weighed down by the UK business. Don't get too focused on the EBITDA margin, because when we comp early stage companies, we are often looking at negative margins anyway. So growth is the issue here, and leverage. Acadia has a ton of debt, and frankly, needs to figure out how to recap its balance sheet, which it has been working on. And once they do complete the sale of the UK business, things should look a little better. Just this week, they priced a new debt offering of 5.5% $450 million notes, whose proceeds will be used to fund redemption of higher priced 6.125% 2021 maturity notes and some 5.125% 2022 maturity notes. However, leverage still remains high at over 5x debt on a lease adjusted basis, which will have to be addressed regardless of the UK sale process. This brings us to the so what portion of the podcast. First of all, this company talks quite a bit openly about demand for services, and it's a great indicator and source of data for behavioral health trends. So that's one of the main things I look for when following this business. It's not the best valuation bellwether because of the number of huge structural differences between this business and your typical behavioral health startup. It's got a lot of real estate. It has high leverage, it's very big, it has low margins, it has slow growth, but there's a lot of good data that comes out of this business. It's also a great indicator for how the market values traditional brick and mortar behavioral healthcare inpatient services and the demand for those services. If I were a founder in this space, I would have one eye on Cadasys and one eye on Acadia. Cadasys is the future. They are the tech-based, remote care, up-and-coming, high-growth business that's focused on getting paid for reducing the cost to the insurance company for behavioral healthcare services. Acadia is the big, old, slow real estate company that overlevered itself and looks more like a private equity behemoth that needs to do some restructuring. However, they are one of the biggest physical plant behavioral healthcare providers in the world, and we have to watch how they're valued by the market, what demand for their services looks like, and we really need to watch the sale of this business unit. If I was a founder of the space, I'd be constantly listening to what the management team of Acadia is saying about inbound hotline requests, utilization rates, reimbursement, and demand. But like I said, I'd be keenly focused on the price they command for the sale of this UK business once that sale process resumes. That's going to be a really interesting precedent valuation to look at. I really want to compare that to LifeStance when trying to figure out what assets in this space could trade for when control is exchanged. Keep in mind what we mentioned earlier, though. The UK business significantly underperforms the US business on margin, so I suspect we may have to take this multiple with a grain of salt when we do finally get it, if we get it. I read one analyst report from Credit Suisse where they explained how they came up with their price target for Acadia, and they mentioned that they value the US business at 9 times forward EBITDA, and they value the UK business at only 7 times forward EBITDA because of the growth and margin profile. So let's see what the company gets when they sell the business with a control premium. While the UK divestiture process remains suspended with little clarity on a resumption, the buyer interest remains high according to bankers involved in the process. Management notes that moving ahead with the process will require greater clarity on COVID-19 and how quickly they can bring beds that are undergoing renovation and retooling back online. This is definitely something we will be keeping an eye on. All right, let's wrap up here. That's it for today. I could spend hours talking about this business. There's so much publicly available data here that is important to me. There's so many nuances to their valuation, their growth, their margin, their footprint, payer mix, leverage profile, trading history, on and on and on. I could spend far more time digging into that, and you're likely not going to listen that long. We will continue to track Acadia and report back to you. Anyway, that's it for this week's quick mental health market update. Thank you for listening. Thank you for supporting us. We recently launched a Patreon account where our supporters can find deeper insights, resources, some of our resource links, and more detailed written analysis of the things we cover in these market updates. I'd love to have you support us there as we continue to bring market insights and share learnings with you. I'll link to that in the show notes. Another thing we are offering our supporters is a monthly Ask Me Anything Zoom call where we will answer questions about our market research, talk about fundraising, provide advice, give feedback. These calls are also a great networking tool for people interested in this space. Let us know if you would like to participate. We held our first one this week. We had about 20 people join us, and afterwards we solicited feedback and received constructive input so we can make the July call even more useful for people. Finally, we want to hear from you. What did you like? What do you want to hear more of? What do you disagree with? How else can we be helpful to you as you build in this space so that you can help people who need it? You can find us on Twitter at StigmaCast, on Instagram, Stigma Podcast. You can email us directly, info@Stigma Podcast. And until next time, stay safe, be well, and thank you for listening.